one thing I want to do, just kind of on your show today, Tim, if you wouldn't mind, is maybe simplify what a pre-approval looks like.
Okay.
Kind of get rid of some stigmas and some things that are keeping people from figuring out where they are with what they could qualify for. Sometimes it could be compared, looking at your financial health can be compared to looking at your actual health, in the sense that you want to leave out some truths. But it really is better to kind of hop right in. If you're within a year, you get with a lender, you can kind of go into sort of the three big things I talk about with a pre-approval. They're pretty basic. Most lenders are going to ask you for the same stuff.
Hey, what's going on, everyone? It is Tim here with the TMA Connection, where we're connecting you with the people and the events in our community that are making a difference in the lives of others. And we throw in a little bit of real estate too with this show. And so today we are tackling a little bit of real estate. We're coming up into 2022, and people are going to start thinking about looking to buy a house. And there's definitely some things that they need to do to prepare. And one of the most major things that you're going to have to do is you're going to need to talk to a lender. And so that's what we are doing today. I didn't introduce myself. I'm Tim. We got Dan the Man in the studio today.
What's up?
Hey, all right. And we have brought in Zachary Hayes, or Zach, from Bayshore Mortgage Funding.
That's right.
A local lender who does phenomenal work with a lot of our buyers. And prepping the buyer for the home buying experience, I think, is so important. And that's what we're going to talk about today, folks.
Yes, sir. It's an honor to be on your show. I call you Mr. Markland out of habit, but I've dropped that in the recent year or so. I call you Tim now for the most part.
We are surrounded by Bobcats.
We are.
Class of 2000.
Class of 08, baby.
Class of 08.
2017?
20. He's the baby. Dan the Man.
Almost a full decade apart.
Yeah.
But I was literally old school.
Yeah.
I went to the old building.
He was at the old school.
So that's important. I am literally old school.
I missed that school.
I do miss it.
I did miss that
I miss the
school.
lead paint. I miss the asbestos. I miss the water fountains that were warm.
The finest drinking water in Bel Air.
I could go for a serving of the mashed potatoes.
Those were good. And the chocolate chip cookies in the... All right, but we're not talking about cafeteria food today.
No, we're not.
All right. So, we have Dan the Man here too. Dan's really specializing in working with first-time home buyers, helping them get through the process, and so does a really good job. And so we're going to kind of just break it down super simple today. Is let's talk about getting pre-approved, some common misconceptions, some things to think about, especially if you're, say 6 to 12 months away from buying a home.
Absolutely.
So all right, so let's roll with it. Let's talk about pre-approval and what it is.
Let's get into it. So this is what it is. So I'm kind of talking to the air, talking to the mic, talking to you. But a pre-approval by definition would just be a pre-qualification on information that you've provided, usually documented. I mean, there's kind of a pre-qual, pre-approval, and maybe what those two different terms mean as far as information that you've stated versus information that you've documented with your all of the stuff you've provided. But
so I'm going to stop you right there.
Okay.
So what holds more weight? What's stronger?
So you definitely want, if possible, to get a pre-approval with everything documented, because the good part about that is we're going to get the work out of the way in the beginning. So when it comes to the time with you where you write your offer is accepted, I'm realistically not asking for much more than some DocuSign signatures and some updated pay stubs, maybe an updated bank statement.
Right.
So the work can be done on your mortgage loan application before you ever find your house. You can pretty much be pre-approved and ran through every AUS system and ready to rock before that that time comes. You shouldn't be running. No good lender should have you running around for documents on the last day before closing.
Right. Yeah.
You know?
So if Dan is working with a buyer who is pre-qualified,
Yeah.
and I'm working with a buyer that's pre-approved, and maybe Dan and I, we're not working on the same team. You know, we're it's different brokerages.
Competing.
Just we're competing. Dan versus Tim. You know, who's going to win that, Dan?
Well, yeah.
Well, I would say the pre-approval letter is going to be your strongest
Yeah, I mean, again, because and it's-
strongest option.
You know, if Amy, who is behind the scenes right now, is the seller's agent, and she's got competing offers, and there's one person who's pre-qualified, and the other person's the pre-approved, they've been vetted more. Yeah.
Absolutely. So one thing I want to do, just kind of on your show today, Tim, if you wouldn't mind, is maybe simplify what a pre-approval looks like.
Okay.
Kind of get rid of some stigmas and some things that are keeping people from figuring out where they are with what they could qualify for. Sometimes it could be compared, looking at your financial health can be compared to looking at your actual health, in the sense that you want to leave out some truths, but it really is better to kind of hop right in. If you're within a year, you get with a lender, you can kind of go into sort of the three big things I talk about with a pre-approval. They're pretty basic. Most lenders are going to ask you for the same stuff. First thing we're going to do, just get a general breakdown of what you're trying to do, who you are, how much you make per year, where do you work, your financial situation, what your goals are. If you have any issues you want to immediately address, we can look at all that. And then usually we'll pull a credit report. A lot of folks with good credit already don't need to worry about the idea that if they have a 780, they get their credit pull once, it's going to drop to a 640.
Right.
It's not really like that.
Yeah.
So by pulling your credit report, it also allows me to do two things. It allows me to calculate the debt-to-income ratio that we talked about, which is basically the way we calculate how much payment you could afford based on what you make per year.
Okay.
That's pre-tax income, by the way. So if you make $60,000 a year, use $5,000 for your income, not maybe $38.80 that you bring home as your income. You're using $5,000 if you're kind of doing some of these numbers at home. But by pulling an actual credit report, we look at your real-time debt-to-income ratio. I can punch in all the maybe information that might be missing. For instance, a student loan payment, if it's deferred, is 1% usually of what the balance is. And then I can also run it through an AUS system, which gives me a true pre-approval based on Fannie, Freddie, FHA, or VA guidelines.
And for the kids in the back, AUS is?
Automated underwriting system.
There you go. Okay, cool.
Yep. And then the last thing is a big one with first-time home buyers is we really want to look at your assets.
Okay.
And I know, like I said a little bit, we talked before, closing costs can be anywhere from 4 to 6% of buying the house, of the purchase price, I should say. That's separate from your down payment. So if you're a first-time home buyer, there may be some down payment assistance available, but you still are going to need to have the assets to bring for your closing costs.
Right.
Which includes transfer taxes, any lender fees, homeowners insurance, regular taxes, title fees. There's a whole slew of items that kind of go on that disclosure when you see it in real time.
Right.
And those items stack up. You also need to have some money up front for an inspection, which I'm here is creeping in the $450 range.
Yeah, depending. And if you get a house on well and septic, it's going to be a little bit more than that.
Yeah, the chimney inspection, septic inspection.
Exactly. These things add up, and God forbid you don't get the house, you're out maybe a little bit of cash. So you want to come in with some cushion.
Right.
You really do.
Well, Dan's been, working with some buyers. I've been working with some buyers already. And in this market that we're currently in, I don't know when you're going to be listening to this, but we're at the beginning of 2022, right?
Yeah, it feels crazy.
Yeah, it feels great. But Dan's out there, and it's a competitive market right now. Limited inventory.
You're not going to get help from the seller.
You're not getting exactly in another market. But if you're going to need help and you're competing,
They're going to go with an offer that doesn't ask for seller help.
Seller help, and I'm sure you'll do another one on offers, but your offer has to be strong. So anything you can do as a buyer, whether that be bump yourself from FHA to conventional, whether that be have a little extra money in case you need to go over appraisal, all these little things. And we don't want to dig in too much here because this is sort of an over
absolutely
scale. But
But hence the point, it's like to every person it's different, and it's just so important that you talk to somebody that knows all those considerations.
Because
And
you don't know until you find out.
Right.
You really don't know what might be available to you, and that's why you also want to be honest.
yeah,
So if you say to me, hey, maybe I have X amount of dollars here in a certain type of account, how we document that account may be different than another, and it might not be any more or less difficult.
right.
But we want to make sure we're doing it the right way, so I don't have to send you back once again when we're midnight hour and
Right.
then you're searching for all this stuff because you omitted some information in the beginning. It's good to just get it out of the way. We'll tackle it. We'll deal with it. We'll move on.
Right. That's awesome. Yeah. And I think sometimes too, people abstain from saying things and they don't necessarily know that they are, they're holding that back and they're not realizing that they're shooting themselves in the foot. And it could very well delay settlement or, maybe even something worse. So, but yeah, so you were talking about getting just the basics of pay stubs and stuff like that. So what else are we looking at?
Well, to be honest, once we're at that point, you're going to, pretty quickly, the numbers are going to be the numbers. We can punch in an address that maybe you're looking at, but we're going to be able to know, just from a math standpoint, as long as nothing financially changes drastically, you don't lose your job, you don't buy a Lamborghini between now and next week, and
Dan,
a lot of people
No
out
promises.
there, it's like, oh yeah, no, I bought a truck, yeah.
Uh-huh.
It's like, well, you should have mentioned that to me.
Yeah.
And what kind of truck was it? Oh, it's the 2022 Gravedigger monster truck. It's like, yeah, I should have known about that because now that $700 payment is jacking up our deal.
I tell people from the very beginning, if you're making any kind of financial purchase, whether you think it's big or small, talk to your lender first.
Exactly.
Because you might just not know
It's
how to make that purchase.
It's 100% true.
Yeah.
And this kind of goes in, one helpful hint I wanted to talk to people about is just what to do with their cash, because it is so hard to save money,
Yeah.
period, for anybody. Doesn't matter who you are.
Sure.
Because the more money you make, the more money you spend anyway, but that's a separate thing. But one helpful hint I would say is don't worry about moving money from different accounts until you've really kind of taken a full scope of your financial situation. We've looked at it, and now we know what you may even be required to source. We may not need to know about everything that you have, but for instance, if you have something in crypto, something in stocks like Robinhood, an app where you can easily liquidate it, that app is going to look like cash in your checking and savings kind of when it comes through to be used. So to avoid some documentation, we may want to get that in 60 days before closing. Then you avoid what's called meeting a seasoning requirement. In other words, it's been seasoned in the account, so it does not have to be sourced prior to the two accounts that you show.
Right.
So if it's older than, for instance, if you have $50K right now in Coinbase that you're going to be using, you could liquidate it to your checking. Now you have $50K in your checking. By the time you buy your house in May, it just looks like a checking account with $50,000 in it. We never have to go through and document your Coinbase ledger where you're doing whatever you're doing in there. Or it doesn't have to be crypto. That goes for anything.
Sure.
You don't move money from your girlfriend's or your grandma's going to give you $10K for a gift. You moved it. Just let me know about it, and what we can do is we can make it easier.
There's proper. You can do that.
Yes.
But you have to do it the right
There
way.
are tons of things you can do that will help you if we do it the right way in the beginning, rather than sourcing all these different accounts, moving all this money everywhere, when you could have just written 2 different cashier's checks or something.
Right. Yeah. Okay. Hey, just curious. With crypto kind of being the newer thing, how many people do you see right now that are using the funds that they have in crypto accounts to purchase homes?
That's a kind of a two-sided question, for the simple fact that a lot of my crypto friends refuse to sell their crypto.
Okay.
So they have some diamond hands, and they're not. So they'd almost rather have their crypto than their house.
Right.
But you do see it, and what you'd see more is it coming from apps that an underwriter is not familiar with. Like if they get something from Ameritrade, they're going to say, "Oh, get your Ameritrade account." But if they get something from Voyager app,
Okay.
or a Crypto.com app, they really it's not that there's anything wrong with it, but we may have to dig through some unconventional documentation to really give the underwriter what they need for a Fannie Mae or for like an FHA loan.
Okay.
A lot of times it will be better, kind of like when you're in high school and you're trying to avoid getting in trouble with your parents, so you kind of just like, it would be better, well, actually, no, we don't want to admit information. We can edit that out, right? But basically, sometimes you don't need the underwriter to be digging through that. So get the money in the account now, provide one savings account statement, and
Right.
that's it.
Yes.
It's easier on everybody.
Right.
That's the goal. It's
Yeah.
not to omit, but make it easier on yourself.
Sure. So,
I just want to jump back here to the credit score. What would you say would be like a good qualified credit score for a first-time buyer?
That's an
someone that hasn't
excellent
built
question.
credit for a long time, but they have built some credit up and they're looking to buy a house.
That's an excellent question. Credit score is something that people should not be freaking out about because, oh, sorry.
just bring that microphone a little bit closer to you there.
Oh, a little bit closer?
Yeah.
I thought I was doing the breathe thing.
No, you're fine.
Okay. I was doing the lean back thing. Yeah.
Yeah.
I just got an AUS approval for someone with a 587 with 40 at a 47% DTI.
Okay.
And that doesn't necessarily make every bit of sense in the world because it kind of not has a mind of its own, but it has its own algorithm.
For people that
Yeah.
don't know, that's not a crazy high credit score, right?
That's low.
Yeah. Okay.
I mean, you could realistically be approved down to usually like a 500.
Oh, wow.
But there's
But you're-
compensating factors. I mean,
Sure.
for instance, if you're buying a $175,000 house, you have a $300,000 retirement account, it's a 401k. It can be used as a compensating factor if your debt to income is there. So, once again, don't be scared thinking you automatically won't qualify because my job, your job, and everybody's goal, my company is Bayshore Mortgage Funding. We're here to fund mortgages, not to turn people down or
Right,
make you feel
right,
bad
right.
about yourself. We want to fund as many mortgages as possible and make everybody happy.
Mm-hmm.
So there's nothing really we won't do to get you to the point where we're qualifying.
Yeah.
So at the end of the day, don't worry too much about your score. Just worry about maybe boosting your score and doing the things that
You know, I would say if you can get with me, a lot of people don't know, a lender can do credit repair for free.
Yeah.
So
You just took my thunder.
Yeah.
That was my next question.
I can do credit repair for free. So rather than spilling $3,000 out on your American Express card or your Bank of America card, which is $3,000 you may need with a $27 minimum payment towards your DTI,
Yeah.
keep that money in your account, you know, and we can possibly put $400 on something else and make the score raise 40 points. Also, those Credit Karma accounts, I mean, I have my own personal opinion about what the point of them is and why why they market them so much, like pull your credit, but they just don't give the best. They are hardly ever accurate.
Gotcha.
They are hardly ever accurate.
Yeah.
So chances are, I mean, if you've had some lates and stuff in the last few years, you're probably in the sixes somewhere, but you can easily buy a house with that.
Okay.
That's good to know. As a lot of people are scared by the credit score number. They think they won't get pre-approved if they have a certain number. So
A lot of folks are really just scared to take a closer look at their finances, and it's really something that you know, 20 plus years ago, they decided in this country that they kind of want to incentivize home buying. So there is a lot of leeway. You don't
Yeah.
have to be A+ person, but there are some things you have to do to put yourself in position.
And I think that's the thing too, is like in the very beginning we talked about 6 to 12 months out. Like, you know, if you're prepping, it's like instead of waiting until you're ready and then flip the switch and talk to a lender, reach out to a lender like now. You know, if
100%.
you're looking to buy a house in 2023, 2024, reach out to the lender now to best educate yourself in the ways that you can put yourself in the strongest position possible where you're going to, you know,
Yeah, and like
Be the
a
most
hard
successful.
inquiry, like it doesn't really kill your credit like people think, but I could do a soft pull. I could do that stuff. I could take a look at almost a lot. I could take a look at a lot of stuff and help folks out that are just looking for some guidance. Like, hey, I have no clue what my credit score is. Hey, I have no clue what a payment would be on a $250,000 house. We'd be happy to help you.
yeah.
You know what I mean?
Well, and so jumping into this next part, there's a huge misconception out there about how much money you need to put down for a down payment. And probably stems back from your parents or your grandparents where you had to put 20% down in order to buy a house.
On a
True or
conventional,
false?
it's completely false.
Okay.
Like I said, there's down payment assistance programs. Those are tricky, and not everyone qualifies for those. So they're really good at marketing themselves, but they can be tricky.
There's income limits.
There's income limits. There's area limits. There's lots of caveats to it.
Okay.
Not to say it can't be done, but just generally speaking, you can put as little as 3% down.
Okay.
So $300,000 loan, $9,000 for a down payment, maybe $12,000 for closing. So in like south of 25,000, you could be in your house, and that includes but some of that could come from a gift fund. So we'll see what that looks like. It's not the easiest thing in the world to save money, and like I said, we know that. But if we know what our goals are, there's lender credits. There's all sorts of ways to chip away at that scary down payment number.
Gotcha.
Yeah, there are definitely ways. So don't write yourself out just because, hey, maybe I only have my $5K saved. We can figure something out. We can get you in somewhere in 12 months or 6 months.
Yeah. Dan and I were talking earlier about non-salaried employees, like people that work in restaurants or people that are, like real estate agents, are commission-based. So talk a little bit about that, Dan.
Yeah, we were just curious about maybe someone who is not showing as much income on their income statement, but they are making enough money that they feel like they can afford to move out, or maybe it's on their income statement, but it's a tip-based job or a sales job that they're doing. Can people be pre-approved if they're not showing as much money on their income statement? Or
that's a good question. I certainly have seen some frustration from someone who maybe is working like a cash job, working for tips where they're getting tips in cash and receiving all their tips in cash. So unfortunately, that could cause a problem if you are dealing in all cash in 2022. I mean, obviously, kind of what you're doing for whatever reason. It's part of the game. I would say work history is really big for anyone who's not hourly wage full time or salary. So that goes for me and Tim Markland here. Yeah. That goes for someone working at Outback. That goes for someone who's selling cars. That could go for someone who's selling insurance. A lot of salespeople.
Right.
And a lot of service people. So when you're commission based, you can either do maybe what you made over the last 2 years. Sometimes it's a 24-month average. So if you made zero your first year and $1 million your second, you might be still qualified for $500,000. So they do like a moving average of 24 to 36 months. So that way you don't have one really good month and one really bad month that throws you out of qualifying.
Right.
So I would say with that, don't write yourself off. But hey, if you're a year out, you're gonna have to start claiming your tips.
Yeah.
And we can't use this may be a little complicated, but you can't use a part-time job unless you've had it for 2 years.
Okay.
So if I went and just picked up 10 or 15 hours at Taco Bell, which I think is paying $18 an hour to be a manager.
Nice. Okay.
So I couldn't use that $180 a week on my salary unless I had it for 2 years.
Gotcha. And how about if you're like have a lateral move in careers? How does that affect somebody's buying power?
There is a little box on the thing that says years in line of work, and I think that kind of jumps into that algorithm. But if you go from I think a lot of it has to do with how you're paid.
Okay.
Some of it has to do with your line of work. If you went from being a teacher to a police officer, I'd say your police officer salary is going to be as stable as possible. If you went from being a teacher to selling cars.
Right.
So there is a human aspect to the underwriting.
Yeah. Okay. And again, no two people's situations are the same.
Exactly. Exactly.
But it would definitely, you'd say it would definitely help. I mean, if you're working a job under the table or something, they're paying you cash. The bank's not really going to qualify you for a loan based off cash that you're not.
Exactly. And those are things that when I do kind of the original application, we're going to pretty quickly uncover these things.
Right.
That way, by the time we get done with the conversation, they say, okay, I got to go do this. They're not going to leave thinking a fairy tale that they're going to buy a house with the money from their mattress.
Right.
We're going to get them on a 12-month or 24-month plan.
Yeah.
Hey, file your taxes. Hey, get a job where they're paying you a W-2.
Yes.
The cash stuff is great when you're getting it in hand, but I've seen it hurt a lot of folks just because they can't use it, or maybe they're 1099, they didn't do their taxes right. So you just don't, there's the documentation is set up in a way that you can't really beat the system. So just lay it all out there.
Lay it all out there. Yeah. And you just might realize that it's going to be a lot easier going down that road.
1,000,000%.
And there's no surprises as you're a week out from closing on your house.
100%.
Yeah.
100%.
Yeah. So just a few more wrap-up questions for you. Okay. How long have you been in the lending business as a loan officer?
The lending business. So I actually got started I was in this building. I was upstairs.
Okay.
But I got started in July of 2012.
Okay. Wow.
Yeah. Man. So I'm coming up on 10.
10 years.
I'm coming up on 10. It doesn't feel like it.
Oh, man.
It doesn't feel like it.
Yeah.
I've been through like a boom and a bust and
a
couple presidents and
right. And of those 10 years, as you look at your career, and
this is the most fun I've ever had right here.
Right here at the table,
with the Markland advantage.
Right.
With the Markland advantage. Wow.
Yes.
What do you like most about what you're doing?
I like dealing in the finance world. I
Okay.
like maybe clearing up some misconceptions. Kind of like being a know-it-all sometimes, so you can sit back and do what we're doing right here. So, but
Call yourself an expert?
yeah, whatever. So, but in all honesty, I mean, it's fulfilling to see someone make it happen that maybe didn't know they could make it happen. And you say, look, do this, do this, do this. Follow this blueprint that is already there for you.
Right.
And you will. This is not something to set up for you to fail. Just follow this criteria, and it will work out. And because there's a little bit of trust and a little bit of hand-holding and we were joking earlier, it should work out because it should.
It
but
should.
like the house you're buying could blow away in the wind like the Wizard of Oz. I mean, we don't know this, but everything should be fine for closing.
Right.
And it's like you do have to trust who you're working with. And I do think when you're talking about selecting, I don't know if that's on this sheet, but if you're just going, you really won't need someone that cares a little bit, someone that you trust. You got to get a feel for the person.
I think a lot of times people they put their number one criteria as what interest rate can I get?
Yeah.
And I'm going to shop
When
that
they
interest
change
rate
daily
and they change daily, and you might be getting it lower here, but there's a reason why you're able to get it lower there is because you're paying more and everything. And you gotta
or they send out some jacked up estimate from another lender that's not even
right.
It happens.
It happens
because it comes from internet lenders, and you don't input in your information correct.
But here's what I like, especially with working with you, is that you pick up your phone on the weekend.
Okay. Yeah. I do.
As a real estate agent, and we're shopping on the weekends.
Yeah, constantly.
Constantly shopping on the weekends. And if I can't get in touch with the lender on a Sunday, and if it's a 3-day bank holiday and I can't get in touch with somebody until Tuesday, I've lost some deals because of that.
Yeah, that
100%.
property's off the market.
Especially right now. It's just, flying by. The homes are going on, and, there's multiple offers by Sunday evening, and we didn't even have a chance because I couldn't get in touch with the lender.
Couldn't know what was up with the lender.
And
I agree.
And so having that availability is huge with working, especially with a local lender, and so
And a local realtor. I mean, you can't go in saying, okay, I really like you as a realtor, but, and then if you're worried about the smallest amount of maybe changes in the structure of the rate or the fee, I mean,
yeah.
That's why trust is key.
Yeah.
Because a lot of things are really, really standard, even though they may not seem that way. So you have to work with someone that you trust.
Right.
And that's important. Because we're going to do a good job because we are, we sort of are held to a standard. I mean, this is documented, and there's, we have to really put our best foot forward. Or
Sure.
There's a lot of competition out there.
There's a lot of competition, but you ultimately... if you do right by people, it's going to work out. And when I work with you, and when I see you work with the buyers that we've sent you in the past, we know that we're putting them in with somebody that cares. and with somebody that takes the time. And the third thing I would say is communication.
Yeah.
You know, because you might not be ready to buy right now, and that's fine. That's cool. You know, but having somebody that's willing to follow up, to see how you're doing, to see if you're implementing the blueprint that was put out there before you, and not in a shady kind of like I'm trying to win. You know, I'm trying to
get every deal or something.
Yeah. It's just genuinely caring and communicating through the process.
Right.
I mean, whether it's just being open, and you calling me, you know, once a week just to, you know, and sometimes more.
Yeah.
Especially when you want me to go out to Chipotle, and I've just been so busy lately, and I apologize for that.
I got in touch with the Red Robin bottomless fries. Apparently, you have a soft spot for those.
This Markland family is the Red Robin is the hot spot.
I can't say I've ever even considered eating there.
Oh well,
I'm a burger guy. With
have,
Five Guys that close?
If somebody genuinely sang you a great happy birthday song,
okay,
with clapping and letting the whole restaurant know it's your birthday, you might go to Red Robin.
I really may. I've done that.
You might think
I've done that at Chili's. I've gotten on the saddle at Texas Roadhouse.
See,
I've been serenaded at most commercially chained restaurants in Harper County.
No, but going back with the communication and everything is just communication is key, and you really do a phenomenal job of keeping in touch with the buyer, keeping in touch with the real estate agent, letting everybody knows what's going on all the way up through and past settlement. So. Kudos to you. Wanted to acknowledge you for that.
I appreciate that, man. I mean, I do like my job, which helps.
Yeah.
Because if you were dragging every time you had to pick up the phone, it would be tough.
Mm-hmm.
But you got to like the people you work with, too, Tim. I mean, that's really honestly important. And it's honestly a pleasure working with you. We do have fun.
Yeah, we do have fun.
I actually made up a jingle last night, so maybe it'll be released now that we've got all these microphones. I can't remember it verbatim, so I'd have to go back.
We might need to do a separate recording of that. All right, so we'll do it.
This has been so much fun, and don't let me get too used to this because I might be a weekly guest.
Do you like the microphone?
I like it a little
bit. Hey, where can people connect with you? They got questions. They want to connect with you.
They can, if you Google Zachary Hayes, Bayshore Mortgage Funding,
okay,
I'll pop right up.
Okay.
But if you want to reach me by telephone,
okay,
just give me a call on my cell, 443-299-9285, and I'll pick right up.
That's awesome.
I pick up every call, even in the days of spam, because I never know who it is.
Right, I tell you, yeah. And how about your email?
My email is zhayes, Hayes, at bsmfunding.com. So zhayes at BravoSierraMaryFunding.com. I do a lot of over-the-phone stuff, so.
That's great. That's great. Well, appreciate you coming in. Appreciate Dan the Man jumping on the podcast.
Thanks for having me.
This was awesome.
Yeah, this was awesome. Again, if you have any real estate related questions, you can certainly reach out to us too. Our email is tma@penfedrealty.com. You can follow us on Facebook and Instagram at the Markland Advantage. And you can also search YouTube, where this is going to be playing, and subscribe to us there. Ladies and gentlemen, that's it for today. Zach Hayes, thank you for joining the TMA Connection.
Like and subscribe.
Dan the Man. Dan, where can people follow you?
Instagram, Twitter.
What's that Instagram handle, Dan?
I think it's dweb123.
I think it is dweb123. Yeah,
we'll put it on the screen.
Anna, throw that up on the screen for the people.
And then by cell phone, it's 443-619-2591.
Yeah, Dan's really awesome. Does a phenomenal job with first-time home buyers. But we can certainly take your call, help get you going down the right road.
Yeah.
So, ladies and gentlemen, that's it. Until next time, live your life to the fullest, and we'll see you soon. Take care.